everyone. I'm Stephen Kalajian, and welcome to Back to the Futures. Here we are in September. I've been doing this for 41 years, and you know what happens in September, right? The markets get kabooshed, and here we are, the first trading day of the new month of September, and we have the S&P futures at one point down over 90 points, 90 handles. The NASDAQ was down close to 500. And the first thing I did when I went to my office yesterday, even on Labor Day that we were closed, I did my technical studies, my research, and the first thing I do is I always look at the bigger time frames, and that's why I left this chart up. I saw, and I'll get to it in a second, but I started seeing some big sell divergences on the bigger time frames. I saw the weekly with a very negative pattern, and I said, good luck. Everybody's talking 6,000 on the S&Ps. Everybody's talking about numbers that, you know, to me, I just felt like, whoa, I'm not seeing what they're seeing. I think we're going to get a very sharp pullback here in the next month and a half. And again, it falls into the scenario. But the difference with this time, with seasonalities, is we have an election on November 5th, right? So with that being said, I immediately looked at the daily and the weekly. Remember I told you last session that I look at combination time frames, right? Combination methodologies, combination theories, the same thing. So when I look at the bigger time frames, I look at the daily with the weekly with the monthly. And what hit me here, and I'll show it to you looking at the charts here. You can see on the weekly right here, we were pushing up right here near the highs, V bottom, that 5120, pushed right back up. We were getting significantly over. We had like a 97 overbought reading on my oscillator into the negative MACD. And I said, there's no way, this thing's like going to run into a brick wall here. There's no way that you're going to be able to absorb that type of a push up, okay, into those sell divergences, those negative MACDs. And so combined with the daily being overbought. Now, again, this all stemmed from that V bottom. We went from 57.21 down to 51.20 in a matter of, 1, 2, 3, 4, 5 weeks. Rallied from 51.20 in 3 weeks up to 56.75 or whatever, okay, 56.65. And then we just got absolutely kabooshed right down to the lows, right? So, I mean, to where we are now. So again, it's important when you're trading, and again, if you're taking swing trades or even longer term trades, to be able to read the charts properly. What you're seeing here is it didn't make new highs, but it's a sell divergence, meaning indicator 3 on my studies was a 97 overbought reading into those negative MACDs on the weekly chart. So that to me signaled look out below. And we opened up and we just never looked back today. Never looked back. Again, using multiple time frames is very important. So today, something interesting happened and some really great patterns. The 3-minute, the 5, the 15, all had phenomenal patterns. Before I show them to you, let me explain what happened. When we got the push down, the 15-minute time frames reversed to sell. I'm using my indicator 4, okay, on my 15-minute time frame. Then, then around 10:30, the 30-minute time frame reversed to sell, and then at 11:30, the 60-minute time frame reversed to sell. But once I got the sell on my sell reversal here, let me bring this up here. Right here on the 15-minute time frame. And then if you see, I'll look at the 30-minute. Oh, what's this doing? Let me just bring up 30. Find it. Okay, here's a 30. So here's a 15 right here. Then the 30 reversed to sell. And then if you take the smaller time frames right here, I got the bounce right here. This is the first bounce right here on the 3-minute. This is the first bounce on the 3-minute at 97, 55, 97 on the S&Ps. We pushed down. and then we got the short off the 5-minute right into the 10-bar moving average. S&P's got up to like, I think, 90 and a half, 88, and then 90 and a half, and then dropped sharply. Okay. And then if you see here, right now we have what's called buy divergences, meaning you're making new lows, but the MACDs on the 5-minute time frames are non-confirming. So I would look to buy these S&Ps here between the 63 and 69 and a half range. I'd be looking for longs on that pattern. Okay. Now, when the 15-minute time frame reversed to sell, okay, around 10 o'clock after the ISM number, and then the 30-minute reversed to sell at 10:30, the next trade is the 3-minute, the 5-minute, but then the big pattern is right here when you get this overbought condition into the negative MACD on the 15-minute time frame. This pattern right here was astronomical, a phenomenal pattern. Okay, phenomenal pattern. And so now that we know that the 15-minute, the 30-minute, and the 60-minute time frames are all in sell mode, we have a trend, which is one of my 5 conditions: a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. Okay, so when the 15-minute time frame reversed to sell, okay, it was a disconnect because the 30 and 60-minute time frames on the underlying ETF were still in buy mode. When the 30-minute time frame reversed to sell at 10:30, we were still in a disconnect because now the 15 and the 30 are in sell mode. The hourly is still bullish, and then when the hourly reversed to sell at 11:30, boom! I knew that that was it. Number one, the highs are in for the day, and every rally needs to be shorted based upon the 5 and the 15-minute time frames. Okay, so using these type of technical studies is going to really enhance your trading as a futures trader. Again, it doesn't make a difference if you're trading stocks, futures, currencies. It doesn't make a difference. But here, what we like to do is talk about, obviously, the futures markets. But here, you also need to understand that you cannot trade, based upon my research, and I've done this and I've taught this to top hedge fund managers, you cannot trade the S&P futures, the NASDAQ futures, the 30-year bonds, gold, oil, without looking at the underlying ETFs. And those underlying ETFs for oil, it's the USOs. For the 30-year bond, it's the TLTs. For the S&Ps, it's the spiders. For the NASDAQ, it's the QQQ. I also like to look at the underlying SDSs as well, because I have the S&P futures up on the 3-minute, the 5 and the 15. The spiders up on the 5 and the 15. The SDSs underneath that. Look at the S&Ps go. Just ran 6 handles here. Okay, just ran 6 handles. I told you on that push down, okay, to 69 and a half, okay, gave a range where I looked to buy. S&Ps were not making a new low. Those MACDs on the 5-minute time frame did not make a new low. Look at that, 5.5 handles on the S&P. That's a buy divergence in a negative trend. Remember, one of my 5 conditions. You have a negative trend, and you can have a buy or a sell divergence. In this case, you had a buy divergence. Look at that, almost 6.5 handles here on the S&Ps. Boom, and then right back up. Again, beautiful pattern right here, making new lows. The MACDs did not confirm the low. If you draw your horizontal line, that MACD did not confirm the low. That MACD did not confirm the low. Okay? It's very important to understand when you're looking at the markets to be able to visualize and see this, right? Now, this happened on the Qs, the buy divergence, on the diamonds, and on the Russell. Well, the Russell didn't make new lows. The diamonds, the spiders, the Dow, the YMs, the NASDAQ futures, and the S&P futures all made new lows, and those MACDs on the 5-minute time frames did not confirm. Did not confirm. Okay? Did not confirm. All right? So, with that being said, what's important to fully understand, okay, is by using multiple time frames to be able to capture. My research shows me that using the underlying ETFs and or stocks, there's the probability of 4 to 6 great trades per day using the mark during the RTH, the real-time hours from 9:30 to 4. On the futures markets, it's about anywhere from 12 to 15 great trades in a day because the time is more. I pull the data for 23 hours in a day where I look at the underlying ETFs and 6.5 hours in a day. So what's important is by taking the technology that I spent my nearly 10 years of my life building to be able to teach you the combination theories using multiple time frames, understanding the indicators in the combination form. Remember, price leads and indicators lag, but indicators will then show me the proper pattern and the setup once everything's established. Yes, price leads, indicators lag, but indicators give me the ability to see the pattern. So for example, if you look here, when I had the negative MACD, when I say negative, it's blue over yellow. And when I got the overbought condition, now because this is end of bar, it actually was up here getting deeply overbought. So I knew that when the 15-minute time frame reversed to sell on the spiders at around 10 o'clock, that the pattern was going to set up on the bigger time frame, the daily, between 11:30, 12 o'clock range, and that range, between that time and around 1:30, 2 o'clock. So here, when you got the oversold condition finally, working its way off, and now you start turning up, and now you got this push up here to 90. I think 91.75 was the high. I was calling a range to get short in there. Well, this is the first bounce on the 15-minute time frame after the 15 and the 30-minute time frames reversed to sell. Okay, so if you look here at this time period right here, you can see that this push up really was the time period 11:25 right here, 11:30. So this push up actually happened when the 60-minute time frame also reversed to sell. So now you got the first bounce on the 15-minute after the 30-minute and the 60-minute time frames reversed to sell. What's important to truly understand here is that when you're looking at the market, you cannot just look at one particular time frame based upon my research. You need multiple time frames. And if you're going to be a great futures trader, and that's what we do here, Back to the Futures, is to be able to explain to you by using the technology and the software to give you the confidence, to give you the right understanding of the markets, to understand the patterns that I will jump up and down and tell you how these patterns repeat themselves. Okay. I want to show you gold really quickly if I can pull this up here. Now gold, we're still negative on the 1 hour and the 30-minute time frames on the GLDs. But let me just show you this here, for example. All right. So now you can see here that the MACDs turned positive here from below my pivot line, which is a horizontal line, that the MACDs turned positive here, which gives me the ability to say that I would say there's a significant high probability that these lows are in for the day right here, that these lows are in for the day. And I actually had this nice short here early in the morning, and they dropped, okay? But now that the 15-minute time frame reversed to buy on the GLDs, the underlying ETF for the futures contract, I would say that there's a significant 90% or higher that the lows of the day are in. That there's no way that they're going to make new lows. Now, when the 15-minute time frame reversed to buy, right here at 1:15, right, you can see that there was a little bit of a buy divergence here on the GLDs, and they ran pretty nicely. The key now is that since the 15 reversed to buy, okay, now the 30-minute and the 60-minute time frames are still in sell mode, which is orange over blue. So you have what's called a disconnect, okay, but you have what's called a buy divergence in a disconnect, right? So again, one of the time frames reversed to buy, the other two are in sell mode. If I bring up the GLDs, let me see if I could do this here. So the GLDs would reverse to buy, taking out the 231.33. So gold has got to run another $10, okay, for the GLDs to reverse to buy on the 30-minute time frame. And if that happens, where the 30 reverses to buy, okay, then you would look for a pullback. I would actually short this gold here, looking for a pullback. I would short 23.20 up to 25.20 on the gold futures, 23.30, 24, 25.30. And what I like to do is scale into a position, and then you use a 26.5 stop on gold. What's important here, okay, is that when you're looking at the gold futures, right, this to me right here was a great short right into the close on Friday. The 30-minute time frame reversed to sell, correlating with the 60-minute, and then you get the first overbought condition right there, and of course they got cabooshed the next day. Okay, so now what I'm looking for is a pullback on gold. Since the GLDs reversed to buy, now you have a buy reversal / disconnect on the GLDs right now. And it's also correlating with the gold futures on its 15-minute time frame. I got the cayenne, the blue over orange. So now the key is, if we have enough time with 2 hours and 15 minutes to go, I'm looking to short, looking for the pullback, and then looking for the 5-minute time frame and or the 15-minute time frame to get deeply oversold. I don't know if that's going to happen with this much time. Maybe if gold pulls in, maybe $1.80, buck and a half too, that gold will set up. So when you get the buy reversal on the GLDs on the 15-minute time frame, that means gold would have to drop north of $10 to get a sell reversal back on the GLDs on the 15. All right. So you can see right now we're still negative, but look at the yellow dots. The yellow dots in my algorithm are showing me that they're trying. You can see even here, right here, okay, the yellow dots into the orange. That means that we're very close to getting a buy reversal here on the 30-minute time frame on the GLDs. If that happens, it's pretty safe to say that gold is, the lows are in for the day just now, even with the 15. But if the 60-minute time frame does it, the 30-minute, now you know that then the next pullback, the great trade, is going to have to be waiting for that pullback on the 15-minute time frame. And that's important. That's really super important. Understanding the combination theories, understanding the visualization of the charts, and being able to accurately understand the pattern, and then wait for the right pattern, and wait to be able to short the bounce or look to buy the pullback. Okay, so again, the 15-minute, the 30-minute, and the 60-minute time frames are all packaged in my 5 keywords, my 5 words: a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. Before I move on, does anybody have any questions? And if anybody has any questions who are new, please text me at 914-500-7484. I am here to help you. I'm here to be anything I can to assist you in your guidance of trading futures. I'm 41 years in the industry, August 1st of 1983. We just passed that. So again, no question is stupid. If you feel like you can't ask here, you can call me or text me at 914-500-7484 after market hours, and I call everybody back. I spend countless minutes talking to people all around the world, and I love it. It gives me great joy, but more so, for me, it's just about wanting to give back and help people really be successful traders, and I mean that. Okay, so no questions. Okay, so once we got
we have a question, Steve.
Oh, sorry. Auto alert the patterns. Can we write a study to do it in TradingView? Well, that's a great question. I'm actually working with Billy now, and we're going to hopefully automate a lot of this on my new platform in the future. You would have to know my code, but I'm going to be pumping out. Billy and I are working with a big quant firm where we're going to hopefully be able to push these trade ideas, trade alerts out hopefully in the next 3 to 4 months. But that's a great question. But again, I would have to give up my source code, and I am not doing that right now. Okay. If I'm a trader, well, oh, I just missed the question. If I'm a trader who prefer to hold 1 hour, so would you be better to just focus on? That's really another great question. I think if you're a trader and you want to hold something based upon a pattern, I would combine the 15 with the 30-minute time frame. Does that help you in any way? Okay. Not a fan of the 5 minute. Well, I do a live stream every day from 9 to 4, and a lot of people like the 5 minute, the 3 to 5, and the 15-minute time frame. So I get it. Here goes gold dropping right now. Again, I'd be lowering your stops if you're short gold. Okay. So, for example, as you're saying here, if you're looking at the S&Ps on the 15, so you would basically, once you got the sell reversal, there really was a one bounce here. Okay, after the sell, here's a second bounce, but that came, obviously, that came like an hour and a half later. So let's just say, for example, you wanted the 15-minute reverse to sell, the 30 reverse to sell correlating with the 15, the 60 reverse to sell, and then what you want to do, you short the first bounce right here above 90 into the moving average, and you put your stops in, you scale into a position, and then look at the gold drop. Look at gold dropping. S&Ps, I'd be buying them here, 62 and a half, 9.5 range if we get another push down. Gold just dropped here again. I'm looking for gold to get the pullback. Now the GLD is reversed to buy, so I'll be looking for the bigger time frame on the GLDs for a long. Okay. Again, I do a live stream every day from 9 to 4. I'm guiding, I'm helping people, I'm teaching the software, I'm explaining the patterns, I'm explaining what I'm seeing. Again, I taught this to a lot of top hedge fund managers. Those hedge fund managers never used the MACD, never used a combination of methodologies, never used the ability when you're trading futures, the underlying ETFs, the spiders. So, well, listen, I'm glad I got to help them and taught them a couple of things. They are friends of mine. Some of them are. And the key here is that what you want to be able to do is to be, at the end of every single day, to be able to say you pulled money out of mother market, right? Because I've heard a lot of crazy stories in my life. The guy was up $9,000, and at the end of the day, he lost $1,000. That means that's a $10,000 swing. And really, there's no need for that, or trade into earnings, or anything, or trade into an economic number with futures markets. Okay, so what you want to be able to do. Hello. Yeah, 2 minutes. Okay.
Call me in 2 minutes.
Yeah. So what you want to be able to do here is to be able to take advantage of the patterns, trade, raise your stops if the things are going in your favor, be able to utilize the market in a way that gives you the best advantages, to be able to take the patterns, understand the trend that you're in. If you're looking to scalp the trend, then you switch to micros. If you see a great pattern like we saw at that right here at the 1135, you switch to the big ones. So the first pattern was the 3-minute time frame after the 15 and 30-minute time frames reversed to sell. Here's a 3-minute pattern right here. Okay, this is the 3-minute. The second is the 5 and the 15. Now I'm hoping that we get one more push up here, because both the 15, the 30, and the 60-minute time frames are deeply oversold. And by tomorrow, we should get a push up on the 15 and the 30, and then I think we head right back down again. So to me, again, that's a great question as far as someone who doesn't like to look at the 5-minute time frame. And it's to each his own. I have people who trade the 1 minute off of my software, and I'm like, I can't. I'm not looking at a 1-minute time frame. I'll be in a hospital. Forget it. I'm not doing that, right? So I think it's important. You got to be comfortable with the time frames that allow you. But again, when you're trading futures, remember, you need to look at the underlying ETFs in the futures markets that you're currently trading, okay? And I think that's really important. If you could just gain the knowledge of just using this technology in trading futures alongside you looking at ETFs, to me, S&Ps, okay, I would look to sell these 70 to 74 here. Gold's going to pull in nicely off the 5-minute. I like to see this gold get anywhere between the 19.5 and the 21.5 for longs. Okay. Now, again, why was I calling longs there? Again, we're making new lows, and the MACDs are non-confirming on the 5-minute time frame. These MACDs are not making new lows here. And again, more so in the NASDAQ. There goes the NASDAQ. Okay. So the NASDAQ actually has, well, about the same pattern that I'm looking at. Again, their buy divergence is a negative trend. Remember, you can have a trend, which we have right now. The 15, 30, and hourly charts are bearish on my work. And then right now, in the negative trend, you can still have a buy and a sell divergence. And right now, we have a buy divergence in a negative trend. Okay? All right. Does anybody have any questions? We got about 4 minutes to go here. Again, I think that what you're seeing here is healthy for the markets. The market's been in this a straight line. You can see oil is down right now over 4.5%. Nothing but sells. I posted this on my friend's Bloomberg commentary part. I had nothing but sells today in oil, on the S&Ps, and in gold. And so, bingo, out of the gate, there was nothing but, to my opinion, straight down once the 30-minute time frames. And let's just say, for example, the 60-minute time frame using my algorithm on indicator 4 did not reverse to sell. Well, it's 2 out of 3, the 15 and 30 did, and I would be going with shorts on that, even though it's a disconnect. All right. For me, I think the most important thing is to be able not to overthink, learn the patterns, learn the combination theories, take the indicators I have, indicators 1, 2, 3, 4, the 10-bar weighted moving average, okay, understanding how to use multiple time frames, understand the ability to read the market using software. One of the things I decided why I wanted to do this is because I'm tired of people struggling and failing, right? And I'm very, very upset with all the different things out there that get rich quick things. And that really bothers me. Like I said, 41 years in the industry. For me, gold just dropped about almost $2.50 just now. Okay, so I knew that pattern based upon the on the 30 and 60-minute time frame on the GLDs are negative. So does anybody else have any questions with 2 minutes to go? Again, I'll be back Thursday, 1:30 for Back to the Futures. It's a great, great show here. There's so much to explain and see things, learning the software, teaching it to people. For me, I think the most important thing is for everyone to be able to learn my system, to be able to really use it on your own if you're going to trade the Tokyo session, and if you're crazy like me that doesn't get any sleep, trade the European session. Okay. Gold just dropped more than 2.5 just now, actually 3 on the gold. And S&Ps are trying to make new lows. Well, they are making new lows. So I'd be looking to buy in between the 60 and the 66 range here. NASDAQ futures, again, you're not, what are you doing here? You're getting, let's see, NASDAQ futures. So the NASDAQ futures, I like to give anywhere between like a 20 or 30 handle range. You don't have to go in every one. I like a lot of people go every 8, every 10. And, there's a way of either doing 1, 1, 1, 1, or you can pyramid 1, 2, 4, and 8. Again, it's up to you, whatever's comfortable for you here. All right. Any more questions at all? If there's no questions, I will see you here Thursday at 1:30. Again, anybody willing to call me or want to reach me, my number is 914-500-7484. Be consistent. Learn the futures market. To me, it's the greatest markets there are. Have a great day, everybody.
Capitalize on stock market uncertainty this coming election. When most see disaster in the headlines, informed traders see dollar signs. Elite traders have embraced market fear for decades, and now you can too. Join us at our exclusive Fall Tradier Virtual Summit, sponsored by SIBO, on Wednesday, September 18th, 2024 at 10:30 a.m. Eastern Time. Claim your seat at summit.tradier.com before registration closes.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.